To the night to get a deal on regulating the banks.
That's right, Stuart, and they were successful. 14 hours of talks, in fact, to get there. This deal on effectively putting the European Central Bank in charge of regulating the banks in the Eurozone. Well, they reached agreement, even though there have been a few sticking points. I can tell you what those were. One of the big ones was the size of the banks to be covered. Countries like France wanted to see all banks covered. Germany said no, they prefer just the bigger ones. Well, it will be banks with assets of more than 30 billion euros. That's about 150 to 200 of the 6,000 banks in the Eurozone. Another one was the timing of the programme. Well, it's been agreed that the ECB will take over its powers from March 2014. And finally, even non-Eurozone members like the UK and Sweden seem pretty happy with this deal in its broad outline. They wanted to make sure that they weren't going to have too much influence over their own banking supervision systems. They seem happy so far with that. Of course, the devil is in the detail now to be worked out over the next year on all of that.
There's always that devil to work out, isn't there? A bold policy move as well now. This is from America's central bank on Wednesday.
Yes, so the Federal Reserve announced that it's going to target an unemployment rate of 6.5%. And it says to get there, it's going to keep interest rates, short-term interest rates at or close to zero until that time. Well, it's the first time that the Federal Reserve has tied its interest rates directly to unemployment.
6.5. That's the magic number for Federal Reserve Chairman Ben Bernanke. He wants to get US unemployment rates down to 6.5% from their current rate of 7.7. In a move that ties monetary policy to the economy, the Fed says it'll keep interest rates at close to zero to reassure investors until this target's reached. Bernanke added that they'll continue to buy some $85 billion worth of government bonds to boost the economy.
In continuing its asset purchases, the committee seeks to maintain downward pressure on longer-term interest rates and to keep financial conditions accommodative, thereby promoting hiring and economic growth while ensuring that inflation over time is close to our 2% objective.
Unemployment's been dropping gradually in the US. This latest move is a bid to give that downward trend an extra push and in the long term get the number of job seekers under 6%. This comes amid ongoing concerns about the impending fiscal cliff. Bernanke called on Congress to find a solution before the tax deadlines kick in, despite the enormity of the task.
If the economy actually went off the fiscal cliff, our assessment, the CBO's assessment, outside forecasters all think that that would have very significant adverse effects on the economy and on the unemployment rate. We cannot offset the full impact of the fiscal cliff. It's just too big.
This round of tax hikes and spending cuts could be implemented in January if Congress and the White House do not come to an agreement, something they've been seeking to do for weeks now.
Now, there's worries about the fiscal cliff, of course, inevitably, I suppose, still having an impact on the markets.
Yes, that's right. That seems to be the dominant mood music for investors, whatever else happens. We can take a look at what's been going on in the Asian markets, and it's been a bit of a mixed picture so far this Thursday. Now, one thing to notice is that the Nikkei is up very strongly there. Now, that's because those comments from Ben Bernanke push down the value of the yen, and a lower yen helps Japanese exporters, which markets like, obviously. The Shanghai Composite off by about 0.5% though. And let's take a look at Wall Street as well and how they reacted to the news. Well, they had a bit of a lift initially from those comments from Ben Bernanke, but this fiscal cliff news made them end up looking pretty flat by the end of the trading session. I just wanted to mention as well that the other thing that will be happening that markets will be interested in this Thursday is EU leaders at that summit that they're having are expected to unblock this 34 billion euro payment to Greece. That's after the completion of the buyback programme, which was judged to be a success. Well, let's get some of the day's company news now. And damage was caused at offices belonging to Peugeot Citroën on Wednesday. Workers stormed a building belonging to the French car maker northwest of Paris. They were protesting at plans to cut a further 1,500 jobs, and that's on top of 8,000 job losses already announced.
Facebook is set to increase its privacy controls. It follows complaints about updates that show what users are reading or viewing online. A new two-step process to be unveiled next week will give more control over what is made public.
And the American retail giant Walmart faces an inquiry in India. It's being investigated over payments made to lobbyists in Washington. Lawmakers want to know if any money was paid in India. The country recently agreed to open up to foreign retailers like Walmart, and that's caused controversy among many smaller business owners.
Now here in France, opposing sides involved in the row over a steel plant have taken to the media, haven't they, Matthew?
Yes, now this is the dispute over the closure of 2 blast furnaces at a site belonging to ArcelorMittal in the northwest of France. Now, the head of the company, Lakshmi Mittal, has been speaking to a number of newspapers, including the Financial Times and Le Figaro here in France. Now, he says that threats to nationalise the Florange site, which were made by the government just a week or so ago, were a step backwards. And he said that threats of that kind will make any company think twice about investing here in France. Well, meanwhile, the unions are having their say as well, and they've been telling the media that they've got their hands on a document which shows that the Florange site is, in fact, profitable. Now, the company says that that document is out of date. It's not relevant to the discussions that have been going on. But the unions say that they prove that the company's claims that the site wasn't working are false. Well, this will all be hashed out today. Unions will be meeting management later this Thursday. They will be finding out a bit more about the exact detail in this plan that was agreed with the government to see we'll see what they think of that.
Okay, excellent. Well, as Matthew was saying that, I've been given a prop, and making their way on set are some little friends who've joined us on set. There is a reason why we're looking ridiculous. Obviously, it's a week and a half to go to Christmas, but also Christmas toys. That's what you're talking about, isn't it?
We are talking about Christmas toys. Now, there is a business reason, despite the silly hats, as I just saw myself and I'm horrified. Now, Christmas spending will actually be slightly down in Europe. Won't be a surprise to know that, by about 2% across the board. And about half of what households spends actually goes on toys for children. And
like
here's
this
one
one
of them here, and they are yes.
Go on,
now,
switch him on.
I would like to, when we can see him. That's it. There you can see what families spend on average across different European countries. Now let's hear from today's co-presenter.
I never thought I'd have the march stolen on me
Hip-hop.
wearing this by a hip-hop Mickey Mouse.
Yes, exactly. It's pretty impressive, isn't it? Now, the reason we've brought him on is that one of the big trends this year is technology, and technology in everything. It seems that nothing is going to sell unless it has technology involved. I feel like I should let him finish there. There we go.
He's done.
Thank you, Mickey.
You can switch him off now.
Thank you, Mickey. Now, there's not just him, there's also Barbie. Now, it's not just new toys like that, but also traditional ones involving technology. And you can see here, Barbie, she's got an interesting looking T-shirt, and you can take a photograph, and that pops up. It's probably quite difficult to see, but it pops up on her T-shirt there. They always switch off just at that moment, don't they, when you need them. But
It's different anyway.
Yeah,
Technology kind of taking over the toy world.
absolutely. And what we're seeing as well is even in traditional games like Monopoly, for example, the use of technology. So now playing Monopoly with an iPad, with a special app, one of the key trends. But there's also been a return to nostalgia as well. Toys like Star Wars are coming back. Lots of parents who are buying toys for their children, hoping to see perhaps things that they remember when they were younger. So lots of interesting trends there.
Excellent. Matthew, I'd like to say you look ridiculous. Did you know that?
You do too, Stuart.
Thank you very much, but my pom-pom's larger than yours. There you go, that's Christmas just about wrapped up for you already here on France 24. Coming up for you